NVIDIA is a stock we've talked about a lot. We actually don't have it in the American Resilience portfolio, which is our growth portfolio at 76 Research. We have some plays on NVIDIA, but we still love NVIDIA. It's just that it's pretty steep these days. Here's a clip of the founder talking about the future of NVIDIA.
I'm hoping that NVIDIA someday will be a 50,000 employee company with 100 million, AI assistants. And they're in every single group.
Right.
We will have a whole directory of AIs that are just generally good at doing things. We'll also have our inbox is going to full of directories of AIs that we work with that we know are really, really good, specialized at our skill. And so AIs will recruit other AIs to solve problems.
Right.
AIs will be in Slack channels with each other.
And with humans.
Right, and with humans. And so we'll just be one large employee base, if you will. Some of them are digital in AI, some of them are biological. And I'm hoping some of them even megatronics.
Wow, okay. Like, what does that mean, right? What's your take? I mean, we're moving towards AI, and I think that the sooner people recognize that and prepare for that, the better. I am a big believer in Web 3.0. I think that the changes are phenomenal. You and I have talked about some of it right here on this channel. The future is now, and it's coming, and it's going to be, like the things that we're going to see in our lifetime are just going to be mind-blowing. I think absolutely mind-blowing. And, Optimus is one. We can talk about that later. I'm just waiting for it to be able to make my dinner and make my bed, and then I'm all in. But, like these changes are happening. They're swift. What's your take on NVIDIA and what its potential is? I mean, we're looking in the market and it's done pretty well, especially vis-a-vis some of the other players in that space.
Yeah. NVIDIA, fascinating story. And it's basically more or less back to its all-time highs after a little bit of a downdraft. Yeah. In our model portfolios, we don't have NVIDIA. We don't actually have any of the Mag 7 stocks. And part of that's just deliberate in that, we want to give investors some alternatives because I think most people, NVIDIA is 6% or so of the S&P 500. Yeah. A lot of people have that exposure.
Yeah. And by the way, I should just say that's an important sort of note because your point is a good one. In other words, and I have our graphic for our website kind of covering some of this stuff up, but the whole goal of this is to provide you something that's different. Too many financial advisors are, okay, we're going to put you in this, that, and they're charging all this money to put you in this and that. And then if you look at it, it's exactly the same as the S&P or all these funds. It cracks me up. Like some of these funds, I'm like, guys, like it's the S&P for goodness sakes. And that's really, this is value here because you're getting picks there. You can go invest in the S&P index. I encourage people to do that. But what we're trying to do is something a little bit different. And so you can see, I've got sort of a proof of performance chart here for the 3 months ending 9/30/2024. And you've got consumer financials, utilities, real estate technology, real estate materials, financials, consumer. These are the sectors that we're in. And you can see the median stock price up 10.8% versus the S&P 500 index up 5.9% in that time. So I'm not dissing the S&P. I think that people need to be in it. I encourage you to be in it. But I do think that, if you're going to pay for some research, you ought to be able to get something that's a little bit outside of, this is one of the income builder portfolios, outside the box.
Yeah. So I think we really conceive of these model portfolios as being like a nice complement to a holding like an S&P 500 index fund. Yeah. Which people would really tend to have. But, when you think about Jensen Huang and that clip, you really got to listen to that guy because, if there's someone who knows what's happening in technology and the underlying economy, it's him. And what he was really talking about is, what they call agentic AI, which is, the machines they become like workers, right? And they think independently and act independently. And he's describing a scenario where, you go to the office, I guess maybe we want to go to the office, your virtual office, and you're going to be like interacting with bots. You're going to be interacting with AI agents, just as if they were people, like almost to the point where you won't differentiate between people and AIs. Now,
weird.
It's weird, but it's happening. And like, it's, we wrote about it in the 76 report recently. Vinod Khosla is another big-time Silicon Valley entrepreneur, the founder of Sun Microsystems, and he was in an article recently in the Wall Street Journal talking about his expectation about AI being a massively disinflationary force, potentially leading to 5% real like GDP growth rates in the U.S. and a lot of job losses. And this time, it's not really, over the last few decades, we've seen the impacts of technology and NAFTA on the Midwest and the industrial base. This time it's coming for the service sector, which is, 80+% of workers in the private sector. So, now this is good and bad. This is a potential solution to real GDP growth and real productivity growth. That's what you want. And that's great for investors. On the other hand, there are going to be losers in this. That obviously people who lose their jobs, but that's going to create a lot of slack in the labor market, and it's going to be disinflationary. And then there's going to be companies that potentially get disrupted and destroyed by, these efficiencies that are potentially going to come through. So I think that's really
as you invest. One, you got to be invested in this stuff because if you're one of the casualties, you at least want to, have some skin in the game of what's working. And then I think in terms of the other companies out there, you just have to be really, really selective. It even sometimes makes me nervous because I look at the S&P and sure, you get Mag 7, but there's going to be winners and losers, I suspect, even within the Mag 7. Look at Intel. Intel used to be rip roaring and look what's happened at that company. NVIDIA used to be a little nothing. And now it's so commandeering and its valuation is so rich. And so I think you just have to be thoughtful and sensible about what you're doing in this environment.
Yeah, essentially NVIDIA destroyed Intel. Intel's still alive, but that was, those we talked about the other day, those GPUs kind of beating the CPUs. Interesting footnote on Intel, I guess Qualcomm today saying they're going to wait to see who wins in November before deciding what they want to do with respect to potentially acquiring all or some of Intel's assets, which I find interesting, and it makes sense because the antitrust outlook is going to be, different, and the international trade outlook. So that'll be an interesting development. But you want to be diversified because it's hard to predict who's going to win or lose. But you want to go through the effort of saying, hey, look, if I'm going to buy a stock, I want to be on the right side of this trend. Right. I don't want to be disrupted and dismantled by AI. I want to benefit from AI.
Absolutely.
And I think tying it back a little bit, my thoughts, how this all interplays with like gold and Bitcoin.
Yeah.
If there is this is a little bit of a paradox because if there is a lot of disinflation and that kind of pressure on the economy, I think what's logically going to happen is that's going, and that translates into job losses. We're going to see more of what we just saw, with the Fed recently, which is that, kind of easing monetary policy, printing more money to spur the job market and to kind of counteract the disinflation because we need inflation in our economy. We have way too much debt to allow for actual deflation in our economy. So you'll see even more monetary debasement potentially to counteract. And there I see hard assets, real assets like gold, potentially Bitcoin, but other real assets like a lot of the kind of underlying assets that underpin our holdings in the model portfolios. Yeah. You see those kind of appreciating in real terms, but also in nominal terms. So if there is a disinflationary wave from all this AI and this big productivity boom, you really want to own real assets as a counterweight to how monetary policy is going to react to that.
It's a really good point. People can read more, learn more, get the model portfolios. You can subscribe for as cheap as, guys, $1 a month. If you use code word $, go to 76research.com, get the 76 report. There's a wealth of information. You can cancel anytime. And you know what? It's only $1. All right. So first 2 months are $1. Then it goes to $9.95. If you want to add on one of the model portfolios, I don't have the exact numbers in front of me, but I think it works out to like an extra $22 or so a month. So look, this is all about you taking care of you. we're here to provide you some guidance on how we see the world right now. And based on our expertise and my having covered markets for 20 some odd years, and Rob having been on Wall Street and been trading and running money for 20 some odd years. So this is a chance to really bring that knowledge to you guys and for you guys to be able to take that and run with it however you may. So sign up at 76research.com. Use code word dollar. Our gift to you. Go and look at those model portfolios. There's 3 of them there. You can get the whole Founders Club, the whole kit and caboodle for the cheapest. I think that's the best value for sure. So go do that. And Rob and I will be back here. Sign up for the channel. Get the alerts. Know when we're live. Make sure that you sign up, because we're going to have little bits and pieces of content coming out every single day for you. So here at 76 Research, and we'll see you next time.